Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on Canadian MJ. So CGC had the higher open, but a pretty big sell-off day. Volume's not really notable, but certainly the action is with the close. So we know we're not going to change this daily trend anytime soon because 43.94 is our lower high, and anything under that is just a lower high. If the bulls are going to actually change this trend, we have to hold the double bottom of 38.38 and see a clear break of the lower high pattern. So if we pull back further on Monday and we break $40, then we have another test of support, and then our new lower high would be 41.65 for the level that the bulls would have to break. The bottom line is the daily time frame, the bulls are not shifting the momentum on CGC, and they have to for us to get interested as bulls. Cron is still in its tightening range, daily inside bar, not by a penny, but we consider that an inside bar. And we're watching this equilibrium as well as APHA, Afria, as well as their equilibrium, and we're going to be looking this coming week for a clear break. And right now, that's the range that I'm watching. Most important support is 15.25. Most important resistance is 16.45. If we break one support level, 15.25, and don't break 15.02, that's notable, and we'll look to the bulls to potentially respond. If we break 16.45 resistance and don't break 16.90 shortly after, then we're going to look for the bears to potentially make another move. So when you have a tightening equilibrium, you have to break multiple levels to be convinced that that move has conviction behind it. And that's what we're watching for this coming week on Cron. ACB, nice move, but again, we're not changing this daily trend until we pull back and form a clear higher low and then get some continuation. 807, 816 are key resistances. We pulled back just under $8. We're still in an uptrend. We're watching the hourly. And if that hourly uptrend breaks, 774, 775, a little double bottom. If that breaks, then daily consolidation is underway. And one more higher low and higher high. You can see how these moving averages are beginning to curl. If we pulled that off and confirmed a clear daily trend change, those moving averages would cross bullish for the first time in a long time. And that would be the start of a shift in sentiment that we're keeping an eye out for this summer. APHA. So again, I like this time frame on the 2-day for clarity. Whenever I'm looking for equilibriums, I want it to be nice and smooth with no fake outs. So we're looking at the high, low, lower high, higher low. And again, we're not ready to call this a lower high yet. If we look at the daily time frame, we have a higher low each day, keeping this move. This is all the same move off of 635. When we lose that pattern and start to pull back clearly, then our lower high will be 721, but we're not convinced that that's our lower high just yet. If we have a red day on Monday, we will be, and actually Monday we do not have Canadian trading. Keep that in mind. US is open, Canada is not. That will affect volume and things, but certainly still worth watching the US sector, or I should say the US names in the Canadian sector. So pretty much a red day on Monday, and we're going to be looking for the daily lower high to be set, and then we'll look for a higher low compared to 635. We can stay in this pattern, this tightening range, into mid-July with how much space there currently is. TLRY is trying to build this base of support and then break back up towards 5103. There's no red flags to this consolidation at all at this point, but if we were to break 4590 and drop to another leg down, that's when we start to see the odds of an equilibrium favor the odds of continuation. Where we stand right now, a 10% move would put us right back at resistance. And the bulls can certainly pull off 10% after a couple green days. So need to see a break of 47.48 on Monday for these bulls to try and have some confidence in this base of support that they have built, and 45.90. If I wanted a low risk trade, 45.90 would be a tight stop, knowing that if it held, continuation would be likely, and if it broke, then a further pullback is needed. Hexo, still a clear daily downtrend. Anything under 593, just a lower high. Looks like we're going to set a lower high. If we drop back down towards the low of 503, our new lower high would be 554. Daily exponential resistance still on watch. No sign of the bulls getting any kind of change in momentum. OGI is the same story. I was looking at 888 as the key resistance level. Anything under that, bulls aren't proving anything to me. And we're rejecting from exponential resistance, and we're looking back down at support. Need to see those exponential moving averages become support in order for there to be a shift. So potential shift on APHA and CRON, if we can break those equilibriums bullish. We've got CGC a ways away from a shift on the daily. ACB, with the size of its bounce, can pull off a higher low and higher high. So keep an eye on ACB over the next week, and just doing the rundown of the names we just covered to see who is closest to shifting momentum. We know TLRY already did. The question is, can we get that follow through? So just with where we stand, again, what I'm concerned with in the sector is the shift in psychological sentiment being reflected by the price action on the chart. And so far, TLRY and ACB have my attention aside from the equilibriums of APHA and CRON. Don't have interest in Hexo, don't have interest in OGI, TRST, no interest. Bears are complete control. And it's worth watching for that descending triangle that we've been drawing on some of these names. And if I were to draw it here, I would put my resistance line right there. And we'd be looking at a support line right there. And again, it's more of a channel than it is a wedge, but it's worth watching for a shift in momentum. Daily exponential resistance continuing to give the bulls trouble. And we are closing in on our weekly support, 594, still about 10% away. Give me another 5% drop, and I will be very interested in looking at making a play off of that support, potentially in daily oversold conditions, but I'm not interested in TRST with where we stand. VFF, just a weak little bounce, lack of bull volume. This is a potential bear flag. If we lose the hourly uptrend to start this coming week, the odds of a daily bear flag will be there. We have to see this little daily trend change with a higher low and a higher high in order to be looking at our 2-week equilibrium setting a higher low. So once that daily trend changes, the 2-week equilibrium higher low will be set, and we'll be looking back up at 1930 as the most important resistance. T-God, bulls not doing anything. We're watching a descending, or I should say a falling wedge here as well. And this is one where the break is almost caused by time going by as opposed to, drawn pitchfork by accident, time going by as opposed to a bull break. So what's the difference? The difference is we're in a channel and we just kind of fade. There's no notable volume. When you see a break, you want to see a bull volume spike and a solid green day. This is just time breaking this pattern as opposed to bulls and price action making a notable change. The bulls are going to have to get over 342 to do that for me because we have our lower high and lower low pattern still intact. But again, the lower low with no follow through is what has me paying attention. 342, anything under that's a lower high. But keep an eye on T-God. Let's see what the monthly is. Keep an eye on T-God for that monthly high or low, like so many other names we're watching for. But we need that daily shift in momentum. So getting to the extraction plays. Let's start with VGW. That's the clear sector leader, but we got a red flag. A clear bull break over resistances and no follow through. The hourly time frame, it was a big spike. Stop buys were triggered, and the bulls just dried up their buying power right away. Looking at it on the 15-minute, it was literally less than 20 minutes of buying and then profit taking. So that's a red flag. That's a break of a key resistance level with no follow through. And if we were to come down now and break 406 and 394 supports, again, big red flag if that were to happen. We're still holding on. We're still right back in the range that we were in. But that is a fake out and a lack of follow through. So we'll have to see if the bulls are able to recover from that on Monday or Tuesday. So labs is a downtrend. Anything under 555 is just a lower high. We would have to come down, hold 541, make that 451, and then change this trend. The daily trend has not changed since the all-time high. That's what we're keeping an eye out for. Any name that's coming off an all-time high, first daily trend change will be notable, and it hasn't happened yet on labs, and there's still a little bit of work to do. Oils. Penny stock, I'm not interested in it. We will be looking for a weekly higher low to form, but we haven't yet. And it's just this slow fade. Look at the volume. Volume is just completely disappearing. The 20-day average volume right now on this stock is about $120,000. I have no interest in that. If there's, a stock where one person could potentially have the entire day's volume, that is not the kind of stock I want to be trading in. So 43 cents is support. 51 and 54 are key resistances. We will find a weekly support level and we will change this daily trend, and there will be some solid gains off the low when that happens. You know, if I had a smaller account and higher risk, higher reward tolerance and was looking for more risk reward, then this is the kind of name I'd be watching. But again, daily exponential resistance, no sign of the bulls just yet, but I'd be scouting it. CXXI finally getting a nice bounce. So again, very quickly, 25% off those lows, but anything under 116 is just a lower high. This is a solid move that has me watching for an inverse head and shoulders pattern with our left shoulder and our head. And if we fail to break 116, we'll look for a daily higher low to form, and then that's the trend change that the bulls will need to shift this momentum. So fail 116, pull back into the 90s, and then make our way to try and change that daily trend. That would be notable on CXXI. And again, another name that I personally have no interest in, but if you want higher risk and higher reward, these penny stocks will catch hype and momentum with the rest of the sector. Their drops are bigger and their bull moves are bigger. NRTH. Bulls are nowhere to be found. Slow bleed of lower highs and lower lows. Daily exponential resistance intact. Anything under 87 cents, just a lower high. Same story. But when I'm looking at this name and comparing it, this little weekly lower high and lower low makes it way less attractive as a bull for something like CXXI for its overextended nature, or oils for its weekly higher low that we're scouting. And I would expect a weekly equilibrium. I don't do much predicting, but if you put me in a room and put a gun to my head and said, predict this, I would say it's going to look something along the lines of this for the rest of the summer into the fall. And that's actually might be a little bit lofty of a bounce. I'd like to under-promise, over-deliver. So I'd be looking at about maybe 60 cents if we change that daily momentum. And we'll see if that follows through. FIRE. Weak bounce attempt. Certainly looks like a bear flag. Anything under 185, just a lower high. We do have a double bottom, but this is a weak bounce. So if 150 breaks, another leg down is coming. Otherwise, have to be looking to set a lower high and head back down to test 150. No sign of a trend change nearby. And again, the weekly time frame here in a downtrend, much less attractive to me than a name that is still trying for a weekly higher low. That looks a lot like Fire and N look very similar. Anyways, N. Quick pumps, bag holders exit, and then we dump. And we're all the way back down now to 60 cents. We're looking at 58 and 49 as support levels. Resistance is 66 and 79. And again, not really interested in N. If I had to choose these penny stocks, if I were looking high risk, high reward, which penny stocks am I interested in? I would be interested in labs and oils and CXXI, because again, very overextended. We're definitely looking for some relief there. Those are the three that would have my attention more so than the others. KHRN, still in a downtrend. Anything under 262, just a lower high. We do have a double bottom at 218 and 216, but until we change that daily trend, the bulls aren't proving anything to us. Worth keeping an eye on this as well. We're looking for a monthly higher low to form. Volumes dropping off, declining volume on the consolidation. And again, this is the monthly time frame now, but the way that these patterns go is equilibriums after big volatility and price discovery. So we're going to be looking for something along the lines of this, and that's going to take a long time to play out. That's looking into the fall. And looking for these equilibriums has been helping me trade the cryptocurrency space the last 3 days with that crazy volatility very well, because it's a common pattern that you see over and over and over again when there's high volatility, whether it's a breakout or a breakdown. Anticipating that equilibrium to come after it is a great visual guide, and then just looking for the little details to fill in the clues as to just how that big, broader pattern is going to develop. So I appreciate you watching. Do good things out there. Message of the day and message of the week for me, the theme, as I've been dealing with a bunch of contractors and small companies, is leaving good reviews and tipping contractors and people that are hauling a bunch of stuff. And the very common response every time is, wow, nobody ever does that. And I think that needs to change. And I think more people need to do that and help everyone out. It's so very easy to do, to leave a survey or a review for 2 minutes of your time and potentially impact someone else's livelihood. So thanks, birds. See ya. The season of baby birds. This mother's sitting on a nest, and I'm pretty sure there's eggs underneath her, so sometime in the next couple weeks we'll have some babies to watch there. Turkey babies, geese babies, duck babies, bird babies. I need to get a bunch of feeders put up. That's the weekend task for now.